right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. If you didn't catch it or a little earlier, I've been up since about 3.5 hours ago. I got up extremely early this morning. Was not my choice by any stretch of the means, but I'm going to pay the piper a little later today for it, I'm pretty sure. But what we have to do, we have a lot of important stuff going on today, obviously. This is probably I want to say the last big event of the year in the markets. It's really the last key event. I'm sure there's going to be days of liquidity or volatility between now and the Christmas holiday, but really this is going to be the last big event as people start to wind down, towards the end of this week and early next week. And it's a big one. It's obviously the Fed, and we are 100%. I say 100% because the market's expectations are 100%. We're 100% expected for the Fed to raise rates today. Now, with that being said, the question is not, will the dollar go up or down because the Fed's raising rates? It's going to be, will the dollar go up or down based on, expectations from, what the Fed's going to be doing in the future. The market is pricing in two more rate hikes, in 2017, and that's where the variation is going to come in today. Where the market is assuming that the Fed is going to raise rates today, basically guide us that we're going to get another 2 rate hikes going into next year. But if that alters at all for whatever reason, that expectation is what's going to shift the dollar today. We are going to go through all the different charts, but I'm going to tell you that right now the market's watching two things. It's watching the bond market and it's watching gold, and that's going to help drive what we see here today and what we're doing today. I'd love to sell the dollar today. I just don't know if it's the right trade. Okay. Yeah, the dollar Canadian's coming down right now. I'd love to sell the dollar. I really think that is the right trade. You want to short the dollar, that's what I want to do. I just don't know if it's the right trade. I think everybody is looking to sell the dollar. That's the problem. Everybody's looking to short the dollar. The question is if the Fed comes out relatively hawkish following all this, stronger economic data, and if they see, the inflation, looking to rise at a much more rapid pace next year, could the dollar continue higher? It can, and that's the rub I've got right now, and that's what I'm thinking. So with that being said, we've got to look at the potential of what if the dollar continues to rally. Remember, and make no bones about it, we are in breakout territory. If you look at the dollar, we're in overall breakout territory. Okay, and while we're above 100, especially 100.50, we're breaking out to the upside. Now, yes, the dollar looks like it's having a hard time breaking higher, but maybe today is what the market was waiting for. The market was waiting for today's confirmation that Janet Yellen and the rest of the Federal Reserve is hawkish. We also got to look at the voting members. We may have a couple of voting members that peel away and vote against this rate hike. We already have Brainerd. I believe it's Brainerd who's worried about the strong dollar. Well, how about if more FOMC governors voice their concern and vote against a rate hike? That's another risk in the market. Okay, so there's a few things that we'll be looking at, and obviously 2 o'clock Eastern is when the Fed meets, and then half an hour after that's the press conference. So let's go ahead and get started with our analysis with all the majors, and we're going to start with obviously the euro. So in the euro dollar, we're struggling at key resistance. I mean, we've noted this resistance here all week long at 1.0060. Do you think that's changed at all? Not at all. Okay. Now, have we spiked above it? Yes, we've spiked above it to 1.0070, but as you guys know, that it's around here that's a big deal, and it continues to be a big deal. So what we have to assume right now is that we are going to break. Now, if we break 1.0670, where's the next stop? Because you got this previous support right here that comes in at around 107. Okay, so you have a couple of hurdles that need to be overcome before the euro can really unleash a rally. So 107.10 is the next level of resistance. All right, I'm going to put us in a range right now. Okay, just because we're having a really difficult time at this time getting out of this big range that we're in, even though we're near the lower end of it. But the fact of the matter is, if we get above 107, 107.10, that could unlock a move for much higher prices. Now, let's imagine that the Fed and looking at all the plots and looking at maybe no dissenters, and it's a unanimous decision. The euro could very easily slump right back through the support and start heading back for lows. So our first level of support is going to be right here, right? It's going to be at 106, right there. Below 106 exposes a move down to 105 and a quarter. Okay, and that is our range for right now in the euro. Okay, let's go over to the cable. Now the pound, the claimant count actually came in a little bit better than expected this morning, so that helped the pound off the lows, but not too much. The pound yesterday, we talked about support being at, whoops, that's the pound New Zealand, pound US dollar. The pound US dollar, we talked about the support being at 146 or 126.60 yesterday, and we respected that initially. Right here, I'm sorry. Right here at 106.60, we ended up, or 126.60. We bounced off of, then we came down a little bit. Now, let's get rid of these fibs, okay, and let's figure out where support is for today. Because if you look at the cable, and let's get rid of this wedge that we were in that allowed for that move higher. Okay, there's two levels of support that we need to be paying attention to in the case that we get dollar strength. 126, then obviously the big one that we've really have been holding quite well, would be at 125.30. So 126 and 125.30. All right, resistance. It's a tough one, guys. It is a tough one. I mean, so where we're sitting right now, 126.50. I mean, our first level resistance is 127 and a quarter. Then after that's going to be 127.75. So 127.25 and 127.75, right? Put us in a range, obviously. Okay. All right. Let's go over to the Swissy. Now, the dollar Swiss, somebody had asked me yesterday about being long this thing, and I'm like, we're right up against resistance. And somebody said, they'd bought it yesterday morning. And it was yesterday during the Lunch Money webinar. I said, you got to be careful because you're right up against this trend line. Um, it really respected this trend line, rolled back over, and even though we had a little bit of volatility this morning, we are at the 618 right now. Now the question is, are we going to hold this? I mean, if you want to go long the dollar, this is the time to do it, especially the dollar Swiss. You want to be long the dollar Swiss? Buy it right now. I mean, this is your support. You've only got a few pip risk. I don't think that's necessarily the right trade. I'm just saying that if you're going to do it, this is it, right? Being here at the 618. But what I do think is still possible is I still think that it's possible that we make a move back down to parity. Parity is going to be key support today, and I know we've talked about that quite a bit. Here, let's get rid of some of the stuff. Let's go back to the 4-hour. I didn't want to do that. Okay. Getting rid of the head and shoulder pattern here. It's already played out. Gets too messy if I keep all this stuff here. So obviously we're at the 618 right now. Okay. A move below here, let's get rid of that too. We don't need that. A move below the support right here at 100.40 might be enough to just stop out traders on the long side to parity. But like I said, if I was gonna be long the Swissy, I'd like to be long there. Okay. It's gonna be key support on the way down. Now, one of the other things here, let's go over to this daily chart. We're in breakout territory here, so that's why dips I think are going to be very well supported. Even if we look out 3-4 weeks from now and we're trading down at 99 cents or 98 cents, these are levels that I'd be really interested down here in buying the dollar Swiss. But that's not today. That's going to be for moving forward if we do it. Now, if we get a spike up in the dollar Swiss, okay, so let's say we get a spike up in the dollar Swiss, then you have to just realize this 102 level is huge resistance. I mean, we had a rejection up here, so you can see how we're going to pretty much end up mid-range ahead of the FOMC. And that's typical, for us to just end up mid-range like this. Okay, so 102 is resistance. still think the dollar Swiss is more bullish than the euro um, the dollar Swiss is more bullish than the euro is bearish at this point. All right, let's go over to the dollar yen. So, like I've told you guys, I mean, ultimately I want to sell the dollar yen. I just don't know if it's the right trade. Okay, I really don't. It's super bullish at this moment, and I have no dollar yen exposure, none at all. Okay. Now, yesterday we talked about 114.70 as being support. That is support. It's a breakout point. But really, support can come all the way in to, let's just call it 114.20. Okay. 114.20, maybe 14.25 by the time we get there. So 114.25, 114.70. Okay. Now, I agree with Paul. If you get a spike up here into resistance, maybe this 115.60, you want to use that as a resistance to sell into, or better yet, up to 116. So 115.70, sorry, 115.60 and 116. Now, I know we've spiked above 116 to like 116.15 or whatever, but I still think that being short around the 116 level might not be a bad trade, okay? But remember, this is all dependent on a hike, the dot plot, and, you know, the dissenters, if there are any. If there's no dissenters, and that dot plot leads us to believe there might be 3 rate hikes next year. You know, the dollar yen might trade well above 116. Who knows? Okay. All right, let's go do the dollar Canadian really quick. Now, the dollar Canadian, as you guys know, is sitting on really key support. Key support is this trend line support that now comes in at, it's got to be right where we're at, 130.90, because yesterday it was at 130.85. Now the 200-day moving average is at 130.72. So I'm going to write down 130.70, 130.70 is mega support for the dollar Canadian. It's the trend line, 200-day moving average, huge support there. Resistance at this point, well, the only thing that's going to take off the downside pressure at this point is to get back above 131.50. But if we get back above 131.50, I think that, okay, you know how, and I think this is, by the way, I think this is going to be one of the cleanest FOMC trades here, because if we can get back above 131.50, then we know that the dollar is bullish, right? Or I mean, I'm sorry, the dollar is bearish, or the dollar is bullish, the dollar Canadian is bullish, okay? But we drop below, you know, 130.70, and that's going to unleash the bearish hounds, if you will. You know, I think that then we have a real clean downside break right through here. So I think the dollar Canadian is probably one of the cleaner setups as far as, you know, I don't care if we get dollar strength, I don't care if we get weakness, you know, we just break below here, break above there, and that's going to give us a pretty good idea of what we're doing. Okay? Does that make sense? All right. All right, when I come back, we're going to continue on with the Kiwi, Aussie dollar index, everything else. I'll be right back. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. All right, so we're going to continue on with our analysis, and we just finished up with the dollar Canadian. Let's go over to the New Zealand dollar. The New Zealand dollar, as you guys know, we're right up against our 618. We're challenging the underside of this trend line. This is the channel resistance. If you guys don't recall, this is you know, this, right? Channel resistance, underside of the trend line. We're basically right here. I mean, um, and for all intents and purposes, um, you know, the this is like an area where we should reverse. I mean, we should, but the question is, will we reverse? All right. I mean, this resistance right here that comes in at 72.40, if we clear it, this is going to be major resistance. If we clear it, it's going to be a breakout. Okay. And, you know, what takes us lower at this point? Well, you know, it's going to be whatever this trend line is. So we'd have to break basically here, which I'm going to just write down as 71.60, okay, by the time we get there. Okay. Now, the Aussie dollar, very similar situation. We just keep hitting our head up against the 76-cent level, or 75-cent level. This is also the 38% retracement. We're trying to grind higher. So let's refresh your memory why this is here. Okay, so you see this? Okay, that's pretty much a zone, right? Roughly. I mean, I can. Oops, that's not what I want to do. It's about like that. Okay, this is all like a zone, right? And we're just knocking our head right into it. Um, and you see that if we can break above 75.25, if we can break above the 75.25, I had to draw this blue trend line from yesterday, but I'm going to delete it. Okay, and let's get rid of. Well, we can keep that out. That's fine. So this resistance here is 75.25. Okay. But if we can break that, 76 cents is exposed. And I know I've been telling you guys that, you know, hey, if we get a move up to 76 cents, that's the, oh, that's what it was. That was the trend line from here. Let me get rid of this. Okay. If we can break this, then a move to 76 cents is what we'd be thinking, right? Move to 76 cents. Now, my opinion is, okay, we're going to have to come back down and take out this 74.65 in order to turn this back to being bearish. 74.65. Right now we are in a range. Okay. Ultimately, I'd like to be on the short side of the Aussie, you know, because if you don't recall, we had a false breakout over here. So ultimately, I want to be short, but I also want to be more confident of my short. And I think to be more confident of my short, you know, it's going to have to be down here. I'd really ultimately like to short the Kiwi at 76 cents. I just don't know if we're going to get that chance. I don't. All right. Let's go over to the dollar index. All right. So here's the dollar index, right? Here's the dollar index. Now, the dollar index, as you guys know, while we're above this, while we're above this uh, breakout point, I mean, it's bullish. I mean, the breakout point is this big channel breakout point. The problem is, in my opinion, is the dollar hasn't given us any further upside. And I think that's probably, starting to worry people. I mean, as a dollar bull, it's starting to worry me too. Okay. Um, I know we dipped below it the other day, and you can see the 38% retracement right here. Okay. Okay, the 38% retracement basically held. I'm going to have to write that down. I'm going to have to write down 1.0060. Then I'm going to have to write down 99.70. Probably better off writing parity, or 100, but I'm going to write down 100, oops, 99.70, just in case we get some severe dollar selling, 100.60, okay? Oh, did I say, yeah, 100.70, it's right there, it's a 38% retracement, okay? Now, obviously, resistance in the dollar index, when you think about this, if we take out this resistance here at 100.15, then we're making a run again for 102, okay? So 100.15, 102, and then that's major. And we are still bullish. I know it's been struggling, and some of these have flipped back over to range, but the dollar index is still in breakout territory, any which way you slice it, okay? US dollar, Mexican peso. All right. This is quite simple for me. First of all, I want to sell it. That is the simple answer with what I want to do with the peso right now is I want to short it. Do I want to short it right now? Probably not. Not at this moment. 2050, 2012, and that's it. That's it. 2012, 2050. It's still bullish. It's still bullish. Okay. US dollar, Norwegian krona. Now, with crude selling off, look at what the Norwegian krona is doing right now. Remember, crude got, do you know what the proper term is for yesterday? What's the proper term from yesterday about crude? Crude got Gartmaned. That's correct. Crude got Gartmaned. You got Dennis Gartman. I'm going long crude because of the breakout. Anybody who's long crude should have been, oh, for crying out Christmas. Here we go. Uh-huh. So crude's getting clobbered. By the way, crude oil specs are like the longest they've ever been right now. Everybody's expecting crude to go to 70. So, when everybody thinks it's going to go to 70, it's probably going to go back to 40. OPEC, blah, 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 all that stuff. Anyway. Fact of the matter is, Norwegian krona held the major support here. And frankly, looking pretty firm, isn't it? Question is, where do we break out if the dollar really gets going? Let's delete. I'm going to keep these yellow lines because these are going to basically denote support and resistance, right? So support is at 840, resistance is at 853. Period, end of story. And while it's above it, 840, 8.53, still bullish, man. And same goes for the Swedish krona. I mean, I know the Swedish krona is going to be really, I mean, it's tough. We have to write down numbers that are not fun. Well, you know, we have to write down 930 and we have to write down 9, and we're still stuck in the middle. And I think you just got to just be aware of those areas. I'm not trading the US dollar Swedish krona. I'm more upset that I missed the damn thing. I missed a lion's share of this move. I mean, you know, as much as I've told you guys over the last, you know, couple of months that, oh, hey, we're breaking out, that's a bull flag formation and blah, 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 you know, all that stuff. Unfortunately, I didn't capture a lion's share of this move. I've only chipped around buying it here and there and making little bits and pieces, but some of you guys have probably crushed it. And yeah, I mean, there's no reason not to be long if you're long. You know, if you got a good price, there's no reason to be selling right now. All right, guys, here's your pre-FOMC bias chart. It's done. Okay. And here's a couple of gold selling off a little bit. Thank you, guys.